There we go. We're recording. Welcome, ladies and gentlemen. It is 10 o'clock. It is time to start our Zoomcast, our fall Zoomcast series for 2022. My name is Robert Crowder. I'm the president and founder of the Benefits Trust. So I'd like to take this opportunity to welcome you to our Zoomcast series. The theme of our Zoomcast series is really not about being the smartest person in the room. It's about being in a room where everybody gets smarter. One of the things that I think about when I think about the insurance industry is how we exchange information and share information so we all get smarter. And I want to talk about that a little bit more today. But if you've got any thoughts, any ideas, you think I'm way off base on something, just put up your hand, interrupt me and say, hey, you know what, Rob, you're crazy. But let's all learn from this experience that we're with today. So the idea, again, is everybody in the room gets smarter. Cameras on. Please put your cameras on, guys. I want to make sure that you're listening and so on. It's all about the CE credits as well, but we need your camera on. That would be greatly appreciated. Mike Ignatz is with us today from the Benefits Trust. Mike is going to be sending you CE credits very shortly following the session. Rob Crowder, my son, is also here from the Benefits Trust. He's going to be taking us through some things as well. Carrie Lane, give us a wave, Carrie, from the Benefits Trust. And on behalf of all of us from the Benefits Trust, we want to thank you for your time today and really appreciate you guys, coming out and saying hello and being a part of this. So let me just share my screen if I could. Be so good to do that. Share. Put together some notes. Everybody can see that all right? Feedback. Hello.
Yep, looks good.
Everybody can see that all right? Great. So what we want to do today is we want to talk about know your corporate client. Know your corporate client. And I've got this Zoomcast series. We sort of broke it down into a couple of different segments, if you would. But as I like to say, you to a few profitable clients with 1 to 5 employees. And that's really what we're going to be talking about today. Our agenda. And this is right out of the FISPR website about what are eligible CE credits. So we've taken this right off of their website, and we're going to be looking at this you to a few, or the small end of the marketplace with respect to employee benefits. So we want to talk about a client needs analysis. We want to talk about understanding risks and how to manage them. We want to talk about reporting and accounting considerations. We want to talk about taxation considerations, and we want to talk about, or we want to have some questions and answers. So hopefully some time for some discussion. If we run out of time, we can certainly have those discussions offline, but we'd love to hear from you and hear your thoughts and ideas with respect to this marketplace. That being said, a point of view, some things that we want to talk about today is with a couple of keystrokes in preparing for this meeting. Today, with a couple of keystrokes, I found that there are 449,770 businesses in Ontario right now. It's amazing. There's 450,000 businesses in Ontario, 440,000 of those. Oh, we're missing a zero, Carrie. Look at that. We're missing a zero. 440,000. I just found that right now. 440,000 have less than 100 full-time employees. So when you think about that, that's the Canadian marketplace. These smaller businesses with less than 100 full-time employees. And I was thinking about this and I'm going, oh my gosh, this is such a huge marketplace. And I was thinking about Willie Sutton in the 1930s. Now, obviously I wasn't born in the 1930s, but Willie Sutton, was, and he was a very active bank robber in the United States. And he kept on robbing banks and stealing money. And then he would get caught eventually. And then he'd go to jail, and then he'd break out of jail, and he'd keep on doing that and keep on doing that and keep on doing that. He robbed something like 49 or 48 banks. And in those days in the 1930s, stole approximately just over $2 million, I think. And finally, a judge asked him, he goes, Willie, why do you rob banks? And his answer was quite simple. He goes, that's where the money is. That's where the money is. And I've talked to advisors and worked with advisors and worked in the space my entire life. And when I see, everybody goes, oh yeah, I only work with companies that have 200 employees or 500 employees, or I only work with the large companies. Well, that's fantastic. But there's 440,000 companies in Ontario that have less than 100 full-time employees. In my opinion, that's where the money is. There's endless prospects. Now, the interesting thing about this is we're talking about that group today with 1 to 5 employees. And I would suggest, and somebody could, point me in a different direction, but I would suggest out of those 440,000 companies, I would suggest that 75 or more than 75, or I would say 75% of those companies have less than 5 employees. So that's well over 250,000. I'm just using that as a really round number. 250,000 companies in Ontario right now are operating with less than 5 employees. And I'm willing to bet that 75% of those do not have benefits. So 75% of those small companies do not have benefits right now. So why are we talking in this space? Well, there's just so many of them that don't have benefits, that are looking for benefit plans, because there was another survey from another source, and the source in this case was Benefits by Design. And they put out a survey and they said 76% of new hires will not consider a job without benefits. 76% of new hires will not consider a job without benefits. So when you think about it, 75% of these small employers don't have benefits. 76% of people that are looking for jobs or looking to get hired won't accept a job without benefits. We've had more companies come to us in the last 6 months or the last 12 months or the last 18 months that are starting Virgin plans or starting new plans, I should say, because they need to have them to be competitive in today's marketplace. It's as simple as that. So I think as well, and why we've sort of put the Zoomcast series together, is benefit purchasing decisions are made differently in each group. When you've got 1 to 5 employees, as I like to say, you do a few, or we like to say at the Benefits Trust, you do a few. I think the purchasing decision is a little bit different than a few to a bunch, or 5 to 20 employees, or 20 to 100 employees, depending on the maturity level of the company and where the direction in which they are going, right? I think purchasing decisions with respect to benefits are made differently. And we're going to, explore sort of the thought process through this lens of that 1 to 5 employees. And really, we want to do this through a lens of how you can provide value-added service at a profit. How can you do this? A lot of people say we don't work in the small marketplace because there's no money in it. I say there's a lot of money in it. And I think we want to look at it from a slightly different perspective and share with you some of the ideas, thoughts, and experience that we've had in this space. Pardon me, share with you these thoughts and these ideas to help you when you run across these cases, to sell them with a profit, because that's the key thing, is to selling these things with a profit. It's simple as that. A little bit of a disclaimer. The Benefits Trust started on January 1st, 1994. We've been around for a long time now. Our target market list is really working with advisors like you, with your clients and less than 100 employees. We do have a number of clients that are significantly larger than that. The reason why we have some of those clients is because of they've got some unique administrative requirements or some unique plan design opportunities that they can't get elsewhere. Pardon me. We want to share our views and our opinions. There are views and our opinions. And I think, looking back over my career, I've been licensed since 1988, and I think I've probably had more than 10,000 meetings in sales meetings in this space. And I know Gord Cowan's with us today. Gord's been with, Gord's a lot older than I am, and he's probably had 10,000 meetings in this space as well. So it's great to see a lot of experience here. This is not a commercial for the Benefits Trust, because according to our friends at the FISRA, we have to make this not a commercial. It's all about the things that we talked about in our agenda. So let's jump right into it. Excuse me. I don't know what's going on. I got a tickle in my throat. Pardon me. There we go. Client needs analysis. Why is this important? Well, when we're talking about client needs analysis, I think it's important, even with the small cases, as opposed to saying, oh, great, you've got 1 employee or 2 employees. Well, here's your option. I think you need to do a little bit of analysis first. And I think this is important. It's to protect you. It's to, help them, but it's really to protect you. You got to know where your client is going to determine the best way to help them, number one. Or it's also important to determine whether or not you want to help them. As advisors, it doesn't happen all the time. It doesn't happen every day, but you run into people in the circles in which you travel, and you run into people and they go, oh, you're in the benefits business. Can you help me? I've got 3 employees. I'm looking for a benefit plan. And we seem to be paying a lot, or we've explored it and it seems to be really, whatever their circumstances are, they're looking for help. So often you say, hey, great, I don't really work in this marketplace, but I'm happy to help out. So we come across these things from time to time. So it's important to understand where the client is going. And that is, that's why you need to do this needs analysis to determine what the best way is you can help them, but also whether or not you want to help them or not. And I've got some notes here. And, one of the things that really came to mind when I was putting this together is some clients, some people, I mean, you all know these people. Some people will spend a lot of time to save money. Some people will just spend a lot of time to save money. And other people will spend a lot of money to save time. So you look at that, slightly differently. And I think, you want to work with clients that are willing to spend a lot of money to save some time, right? They want a great solution. They want it to be tax effective. They want it to be cost effective, but they want it to work, and they want it to work extraordinarily well. And they want you to help them with that. So moving right along, client needs analysis continued. How do you know where your client's going? Well, it's important to ask. It's amazing. So many people don't ask questions. And when I say ask questions, ask future-based questions. And simply the best question that has really changed my life in the last 10 years is from Dan Sullivan at the Strategic Coach. And it's quite simple. And he says, and the question is, if we were meeting here 3 years from today, 3 years from now, and you were looking back over those 3 years, what has to have happened for you to say it's been the best 3 years of your life? Right? So I'm not talking about the past, I'm talking about the future. Where are you going? And if you think about that question and you ask anybody that question, you ask your kids that question, you ask your spouse or your partner that question, you ask it at a dinner party, you ask it among friends. I wouldn't suggest asking it on the golf course because it might take too long to answer the question, but it's a great question to ask. If we were meeting here 3 years from today, what has to have happened for you to say it's been the best 3 years of your life? It's just a great question, because it gets people looking into the future. Actually, it gets people into the future, and then they look back over those 3 years and say, this is what's had to have happened for it to be the best 3 years of my life. Who doesn't want to answer that question? Like, it's a fabulous question. And it's a great question to ask of prospects, because you know what? You're going to separate yourself from any other advisor that they've ever talked to, because no one's asked them this question. They ask them questions like, oh, great, where are you? And what's your industry? And what business are you in? And how's it going? How's business right now? And, they're not asking where they're going, right? But it's interesting when you ask this question, and I've asked it a lot, especially in the last 10 years, because that's when I started asking this question. But the answer that you get, the answers to this question, the answers, plural, that you get to this question will give you a roadmap on where they're going. It's going to be clear. It's going to be concise. It's going to be specific. Right? They're going to tell you that they want to grow. They want to grow by 30%. They want to grow by 50%. They want to stay where they're at. They want to keep status quo. And that's fine too. They want to sell their business. I remember talking to a client or a prospect and asking this question with the advisor that I was with. And they had 3 employees, and they said, what do you want to do in 3 years? And they said, 3 years, perfect, example of where we want to be in 3 years. We want to have this business up to a certain size, and then we want to go public with it. We want to sell it. So very short-term horizon. Other companies say, hey, we want to, grow it to a certain size and then merge it with one of our competitors. We want to retire in 3 years. Fantastic. Their benefit outlook is very different when they want to retire in 3 years. Their horizon is very short. We want to enter into new markets. We want to develop new products, right? We want to buy new technologies. Asking this question gives you that roadmap of where people want to go. And that's when you can decide whether or not you want to help them or not. Because, do you want to help somebody that's, planning on selling their business in the next 18 months? You want to spend a lot of time on this? Probably not. Or maybe it's entirely up to you, but you are the one that is making the choice, right? That's the key thing. You are the one that's making the choice. Also, if they want to grow their business and they're going to expand their business and grow by 100 employees in the next 3 years, you want to set up a different chassis potentially than an off-the-shelf type of product, right? Or somebody that says, I'm going to stay status quo. We've got a particular client in our block through a broker that I'm not sure if he's on this call or not, but they have he has a very unique business. He's a specialist in a very specific area of the construction world. He has a ton of business. He bills about $2 million a year, and he works by himself with an assistant. him and one employee. They're not planning on growing. They're not planning on merging. They're not planning on retiring. They need a benefit solution that helps those two employees, him and his assistant, right? So it gives you a clear, concise, specific roadmap when you ask that question. If we were meeting here 3 years from today, what has to have happened? Simple as that. Some other great questions to ask as well is, what are your biggest fears? It's a great question. What are your biggest fears? What scares you? You know, it's interesting. I've been working a lot in the construction world in the last little while, and you ask a construction, a renovator, a builder, what their biggest fears are. And it's interesting. Their biggest fears are not being able to deliver projects on time. You know, Gord, I promise I'm going to build this house for you in Burlington, right? I'm going to build this house for you, Gord, and you're going to move in on May 24th. Fantastic. My gosh, I can't get windows. I can't get door handles. I can't get, plug switches. It's sorry, Gord, it's not going to be May 24th. It's going to be, August 24th. Oops, sorry about that. It's delivering those projects. That's a big fear. And what that fear translates into is more staff. What strengths do you want to capitalize on? Well, we've got a great reputation, all these types of things. What's giving you confidence looking into the future? If I ask yourself those questions as professional advisors, what are your biggest fears? What do you want to capitalize on? What's giving you confidence looking into the future? One of the things that gives me a great deal of confidence looking into the future is the size of the marketplace here in Ontario. People have asked me, they go, why aren't you expanding across the country? And I'm going, well, I will. I'm happy to expand across the country as soon as we get, a lot more market share in Ontario. With 2,500 clients and there's 440,000 businesses, yeah, we're not there yet, right? Why go to BC when everything, there's 440,000 prospects here, right? So what is giving you confidence looking into the future? Ask your prospect and client that question as well. Now, one thing that's really interesting is, this future-based questions, or these types of future-based questions will create a conversation. It'll give you a clear picture of where your client is going and how you can help them. Sometimes people don't want to engage with you. You know what, Rob, I don't want to get into this. Look, we just need a benefit plan for the two of us, or the three of us, or the five of us. We want it to be as cheap as possible. Like, let's not go down that road yet. Let's just move on and, just show me, how much does this stuff cost, right? If they're not going to engage with you, if you don't know where they're going, how can you help them? If they're not going to engage with you, what I say is next. There's 440,000 prospects. Move on. Not everybody's a prospect. It's interesting. I remember talking to one particular client with this advisor in Brampton. We went in to see them and we said, asked the question if we were, and the guy was not interested in answering the question. He goes, look, I don't want to get into this big discussion. We have a union scare. I want the cheapest benefit plan that we can get for these guys to get this union crap off our back. I want it to be cheap and I want it to be cheerful. And I'm always going to be looking for the lowest price. And I said, fantastic. We can't help you out. Right? We did not want to engage with them. They didn't want to engage with us, to any great extent. They weren't looking at a benefit plan as a tool in their business to help them achieve certain results. They were just looking for a cheap, inexpensive solution, and I hated it and didn't want to deal with them, so we moved on. Next, my favorite word, next. And you can afford to do that because there's 440,000 prospects out there, as simple as possible. Or as it's simple to understand for sure. So understanding risks, point number 2, and we're moving right along here real quick, understanding risks and how to manage them. A benefit plan is a promise between an employer and a group of employees. Yes, that group of employees can be 1. That group of employees can be 2 or 3 or 4, right? A benefit plan is a promise between an employer and an employee. As simple as that. My friend that I was talking about a few minutes ago that has just himself and 1 employee, or just himself originally, he's wearing 2 hats. He's got his employer hat on, and he's making decisions as a result of his company, but he's also got his employee hat on because he gets T4 income from his company. Lots of dividend income as well, but he does get T4 income. So he's an employee and he's an employer. So they're often wearing 2 hats, but a benefit plan is between a plan sponsor, a company, and it's a group of employees. That group can be as few as 1, simple as that. So the question is, what does the company want to promise them? And I like to put things in very simple terms. And the reason why I like to put things in very simple terms is because I often think our role as an advisor is one of being a translator. Our role as an advisor is one of being a translator. And I really want to put things in language that the client can understand. So I say, hey, what do you want to promise your group of employees? And there are two types of promises. One, low frequency, high cost promise, and the other is a high frequency, low cost promise. Well, let's examine those. Well, a low frequency, high cost promise, that requires insurance. When you think about it, hey, I'm going to pay my two employees $25,000 if they die, or more importantly, I'm going to pay their named beneficiary $25,000 if they die. Or I'm going to pay them $100,000 if they die, or the named beneficiary $100,000 if they die as a result of an accident. The chance of that happening is very, very remote, but it's a high cost promise. If I'm making an employee a promise that I'm going to pay them $100,000 if they get hit by a subway, right? Well, that's the high cost promise. And I require insurance to protect the promise, the integrity of the promise, so it continues into perpetuity. So where can you have some of these high cost promises? Well, when you make a promise, for things like group life insurance, AD&D, things like long-term disability, critical illness, out-of-country emergency travel, a big one, stop loss for in-Canada drugs or large amount pooling for in-Canada drugs, depending on the promise that the client is making to its employees, depending on where they fall in these areas. If they fall in these particular areas, you need to buy insurance to protect the integrity of the promise so it continues into perpetuity. One thing that is clear with the smaller employers, and I hate to use the word small employers, because people look at us and they go, oh, you've got 30 employees, you're a small business. I'm going, okay, well, thank you very much, but great, you made me feel inferior. I like to say profitable businesses with few employees, right? But it's you're really limited on what the insurance companies are prepared to offer with respect to the amount of insurance that you can buy in these particular areas. Sometimes it's difficult to get long-term disability, for example, for one or two people, unless it's an individual product. Sometimes you need three or more. Critical illness, often you need three or more. Group life, group AD&D, you can buy small amounts, $25,000, with some very small groups. Stop loss and out-of-country coverage, it's not a problem. But what do you want to promise? And you've got to steer people in the direction which makes sense and is real, to give them the appropriate direction to help them move forward. The second component is the high frequency, low cost promise. And that really doesn't require insurance per se. It requires budgeting. So for example, extended healthcare, prescription drugs, vision care, dental services, maybe short-term disability, depending on the client's needs. But these are things that are going to happen on a frequent basis. This isn't, how many of us that are on this call today? We've got 65 people or 62 people on this call today. How many people are going to go to the dentist in the next 12 months? Well, I'm pretty sure that just about everybody's going to put up their hand if I was asking for a show of hands. I'm certainly going to go to the dentist in the next 12 months, right? So it's not sudden, it's not unexpected, it's not catastrophic. It's just a low-cost promise. I'm going to pay for 80% of your expenses, or I'm going to pay for 100% of your expenses, or whatever it is. It's a low-cost promise that really requires budgeting for these particular items. Now, clients get their head around this and they understand this. They go, that makes a great deal of sense. It's really not insurance, it's budgeting. It's as simple as that. So when we look into the future, it's understanding risks and how to manage them. Which direction does the client want to go? Do they want to look at a defined benefit plan where the benefit is very clearly defined, right? Hey, we're going to give you 80% of this particular health benefit and $25,000 of life insurance. That's a defined benefit. We're going to give you 80% of your health and dental expenses, no problem. Up to certain maximums, certain limits, certain, whatever the frequency, et cetera, right? And we're going to give you $25,000 of group life insurance. That's clearly defining the benefit. Another way to look at it is defining the contribution, saying, hey, we don't care, Ryan, we don't care where you spend your money. You're a valuable employee. We're going to give you $2,000, spend it wherever you want, as long as it's an eligible CRA expense. We know the cost can't exceed $2,000. That's a defined contribution. What a lot of companies, and especially smaller organizations or profitable companies with few employees, are looking at is a combination of both in a hybrid type of model. So we want to explore both of those. But let's look at the marketplace right now. Well, what's available in the marketplace? Insurance companies have some terrific solutions that are out there right now. They're terrific if you're the insurance company, in my opinion. Right? They're terrific if you're the insurance company. Excuse me. They're terrific if you're the insurance company. They're often expensive. They're often very restrictive. They often have a lot of rules and regulations around them. There's a lot of options available to them, and they're very difficult, in my opinion, to sell. I remember when I first started in 1988, there was a lot of opportunities out there from various insurance companies for those 1- and 2-person micro groups, if you would. And they were confusing. You know, oh, well, if you want this health benefit and this other benefit, you know, it was just, oh, the client would often say, this is too confusing. I'll make a decision tomorrow. Well, tomorrow never came, right? So a lot of those insurance company, or a lot of the insurance company solutions are cumbersome, potentially expensive most of the time, and there's not a great deal of value. We've had a lot of companies, or a lot of client feedback where they go, hey, I looked at the premium of this particular policy for Manulife or Canada Life or whoever it is. I'm not picking on any of them, but they said, you know, the premium is $800 a month or $600 a month, and you know, I don't really get that much value out of it. I don't spend even close to that. The other thing is there are third-party administrator solutions like we have, but again, this is not a commercial for the Benefits Trust by any means. Gord, why are you smiling? I'm just, yep. It's not a.
I just find your subtleness fantastic. That's all.
So there's often third-party administrator solutions out there. Benefits by Design's got some great ones. Benicade certainly has some good ones. We certainly have some great ones. But the question that I really want to say is, well, how do you look at serving this marketplace profitably? And I say, you know, the third-party administrator solutions, they all have unique spins. It's important for you as professional advisors to understand what those spins are, right? But it's, in my opinion, it's about leading the client because you're the expert. Leading the client in the direction that you want to go, you're the expert. You do some needs analysis, you find out where they're going. They want to remain status quo, they want to grow, they want to do all of these types of things, right? You want to find out where they're going, and then you want to look at offering them a solution that makes sense based on where it is they're going. You know the marketplace, but you've got to lead them in the direction, as opposed to doing, you know, let me show you 47 different quotes or 33 different options. No, you want to lead them in the direction and get to a yes or no scenario, not a which one do you want. I think they're looking at you as the expert, and you just want to say, hey, great, we've got the solution for you. Here it is. The other thing is I like to say is you want to maximize the cost, not minimize the cost. You want to maximize the cost on this, especially in these small micro groups, because you want to show them true value, because it's a tax effective way to pay for things that you're going to pay for anyway. So one of the things that we've done in this particular area is I like to say we're looking for sick rich people, and I don't like to say that, but we are, right? We've developed this thing called the Smart Business Owner Plan, or Smart Business Owners Benefit Plan. Again, it's for these very small groups with 1 to 5 employees. It's easy. You can get to yes or no very quickly. It's profitable, or from your perspective, it's certainly profitable. It makes a great deal of sense in the client's eyes because they see the value of it. The client sets their own budget, and there's no guessing game and no game playing per se, right? They're not sitting there going, hold on a second, this is costing me $800 a month, but am I getting that much value out of it? There's no game playing because they know what that is up front. So Rob, maybe if you would be so kind as to sort of take us, I'll stop sharing for a moment, but if you could take us through that, what we've got on
definitely.
the website.
Wonderful. Thanks, Rob. So I'll take everyone, we're just on the homepage of our website, thebenefitstrust.com, and I'm just going to click on the Smart Benefits Plan tab, and this will bring us to the plan that Rob was just kind of introducing here. So right first on the page, it just kind of hits home the main points of the benefit plan. One of them being no limits, deductions, or maximums for the business owner. So it creates the most tax efficient solution for the business owner to put everything through their benefit plan and not have to pay for it out of pocket. So 100% fully tax deductible business expense. There's the ability to set limits for employees and control costs through a healthcare spending account. And there's no medical evidence required. So it's really quick and simple for a business owner to set up the plan. A little disruption to their business, and it gets you to yes or no very quickly. So much easier on the broker side. This bit here just kind of hits on the main points of the benefit plan. 100% coverage again with no limits, coverage for drugs, dental, vision, paramedical, and much more. Again, anything that's a CRA approved medical expense is eligible to go through the plan. We do couple that with 60-day emergency medical travel coverage and catastrophic drug coverage up to $1 million in the lifetime, and that's through the stop loss. And then we talk about benefits coverage for the small business employees. Same coverage as the owner if you choose a healthcare spending account. But there's a total cost control because you set up the healthcare spending account. So it's great for the business owner because they know the rates for the employee will never change unless they choose to increase that promise. And they also know that they'll never lose any money that isn't spent. So it's a great kind of way to get the business owner nodding their head up and down. I'm not going to go over these in great detail. You could definitely check them out after, but we have 3 examples of small businesses who purchased the Smart Benefits Plan. And it kind of gives 3 different case studies with 3 different examples. And then if you scroll a bit farther down, we have an FAQ section, which is great. And again, I'm not going to go over these in great detail. I'll let you go back to the page if you want to look that over in more detail. And then right on the page, we have the ability to download the overview and enrollment package and the premium calculation worksheet, which I'll go over. So first, we have the general overview and application guide. I'm going to go over the main points of this. This is a great piece to go over on a Zoom call or in a client meeting with the business owner, or it's a great piece to send to them right after if they want to kind of read everything over and kind of have some stuff to review on their own. Hits on the main point again, business owners often think that they're too small to qualify for employee benefits, and really hits home the no medical evidence required. So about the plan, if you own a company, set up a benefit plan that works for you. Going back to what Rob was saying, how a business owner wears 2 different hats. They wear the owner hat, but then they wear the employee hat as well. So it all depends on what type of promise they want to make. And this couple of good FAQ questions right here. And then this says, if we grow, will they outgrow the plan? So as the company grows, we can definitely help transition the plan to make the plan grow as the employees' needs change. Because again, it's just a promise between the employer and the employees. So as the needs change, we can definitely help design a plan that will work around that. But for today, we're just going to talk about the you to a few. So we have 2 different plans that we'll set up for the business owners. First, I'll talk about the unlimited coverage. Again, as a business owner, you want everything to be able to go through the benefit plan so you don't have to pay for it with your after-tax dollars. So any CRA-approved medical expense is eligible to go through the unlimited owner plan, just like you would in a healthcare spending account. We pay a monthly contribution based on the estimated annual costs of the plan, but it's a bit different than a healthcare spending account because these estimated costs can change as the needs of a business owner can change. For example, if they set an amount at $3,000 per year to kind of forecast their typical spend, but then they might get hit with a few extra crown procedures, or a child might need orthodontia. So then their costs will change drastically, and then the cost can change for this unlimited plan. Every plan comes with a benefit card that has their individual certificate number on it, but just the unlimited plan has the Pay Direct drug card, just because we can't have a Pay Direct drug card through the healthcare spending account. All of our plans have a monthly detailed billing system, direct submission to the dentist. So a dentist can send us claims directly, and then we'll pay the dentist back directly, making it very simplistic for the end user client. And all of our claims are paid in a 1 to 3 business day turnaround time. Typically around 1 business day, but every now and then up to 3 days when volumes are much higher, usually at the end of the year when people save up all their claims and send them in at once. We set these plans up with a minimum contribution of $3,000 for all members combined. And there's the administration fee built in there, which includes your commissions of 15%. There's no setup fees, no annual fees.
Let me be perfectly clear, Rob. It includes your commissions, not a 15%. It includes your commissions of 5%.
Mm-hmm. And it includes the monthly detailed billing and customer service. So then for the business owner as well, we do offer healthcare spending accounts. We typically always recommend doing this unlimited coverage because the budget can change throughout the year, operates just like a healthcare spending account. But an HSA is great for a business owner if they're looking to supplement another plan. If they have a strong spousal plan, an HSA is great because it's always a secondary payer.
The healthcare spending account is always the secondary payer.
Yeah, that's what I was,
Yep.
So if they have a strong disposal plan, or for instance, if we've set up plans for law offices before where they have a defined plan through their law firm, but sometimes they'll set up a healthcare spending account using their own professional corporation to supplement the existing plan they have in place through the law firm. So HSAs can be great for the business owner in that respect as well. So I'll scroll a bit further down. And this just talks about all of the eligible expenses that can go through both plans. Again, any CRA-approved medical expense, prescription drugs, vision, nursing care, medical cannabis, hospital room care. The list is very long, as I'm sure everyone knows. And then this just talks about our insurance coverage. So the 60-day emergency medical, and then the stop loss coverage for the unexpected catastrophic events, typically tied with high cost prescription drugs.
So Rob, if I could just stop you just there for a second. There was a question that came up, and let me answer it. Like, there was a question coming up about no limits, if you would, for executives. What does that mean? Well, when you look at it, I think you want the client to look at it through a slightly different set of lens, saying, what are your expenses? What are your expenses over the next, what do you expect your expenses to be over the next 12 months? And it's interesting because I look at myself, right? And I wear glasses. I wear glasses when I sitting at my desk using my computer. So I've got a pair of glasses at my office. I've got a pair of glasses at my home office, and I keep a pair of glasses. So 3 pair of glasses. I keep a third pair in my briefcase. So regardless of where I am, I'll always have glasses to use my computer. Because I'll always forget them somewhere. So I always, have those 3 glasses. So I never 3 pairs. So I never have to look at them. Or never have to look for them. Pardon me. I look through them, yes, never have to look for them. And so I went and got a prescription. The new glasses were $600 a pair. So I spent $1,800 on that particular pair, or those 3 pair of glasses. Where a traditional plan through a traditional insurance company might have a limit, for example, of $200 every 24 months. Well, I'm making that purchasing decision not based on my benefits. I'm making that purchasing decision based on my needs. I'm a business owner. I'm making a lot of money. Great. I want the convenience of my life. We're just showing you a tax effective way to pay for the things that you're going to pay for anyway. Same thing with, I've got a sleep apnea machine. I'm not embarrassed to say it. I've got a sleep apnea machine, and I've got a couple of houses. Great. I spend time at my cottage. I spend time at my home. So I've got a sleep apnea machine in both because I don't want to have to carry it back and forth. Right? It's as simple as that. So I choose to buy 2 of those and all of the stuff that goes along with it. And I'm just using a benefit plan as an effective way to pay for those. Sorry, Rob, for interrupting.
No, thank you very much. Great examples.
Question. You scored, Kevin. And thanks for that, Robert. The only thing is, I think I know where you're going with that. It makes sense. Everything you said is absolutely correct. But the way you read this document, if I was to show this to an employer who actually has means, they're going to say, I can funnel $100,000 through this thing for my benefit. And the answer is no, unless, and there's always caveats. So for example, in one of your explanations where you have a disabled child, autism comes to mind, I put 1 in, and we got sign off from everybody, including CRA. There was a $50,000 healthcare spending account set up for that one owner of the company because it was obviously deemed to be medically necessary. But outside of that, there's generally a rule or a perceived rule of a threshold that you don't want to go over, or you're going to draw attention to this stuff. So what's your comments on that?
Thanks, Gord. And that's a really good shot of your chest, by the way, with your
I thought it was.
Yeah. There you are. Gord, you brought up a great question, and that's about, could it be deemed a shareholder benefit?
Correct.
Yeah, could it be deemed a shareholder benefit? Well, the answer to that question is absolutely, it could be. But I think it's the way you set it up and the way you set it up in advance that makes sense. And the other thing is, if you have an employer or employees, you should cover them on the benefit plan. Not necessarily the same coverage levels, but they should be included in the benefit plan. Our philosophy is every employer is allowed to have a benefit plan. It's got to be a reasonable benefit plan. Reasonability is not something that reasonability is where you're getting at, but the reasonability is where we're coming back. Sorry, let me come back to this thought. If you set up a benefit plan, if the promise is made in advance, you're showing, you've got a booklet, you've got a card, you've got a contract, you've got all of these things that are in place, just like any benefit plan has. You're paying premiums on a monthly basis. You're funding it appropriately. You're not doing it retroactively. And you're making this happen, and you're including employees where employees are present, right? We've never had a problem. We've been doing this for
but we're not talking employees, Robert, because employees are a much easier response to that. We're talking about coming back to the owner themselves.
I understand, Gordon. Yeah. I understand that, but with respect to the owner themselves, we've had people that have set up these plans where they give their employees a healthcare spending account for $1,000 or $2,000, and they're setting up plans for themselves, which might be $20,000. Their total cost is $22,000. The auditor, if they've been audited, the auditor comes in and looks at it and it says, hey, it's the same cost every single month. It goes up, it goes down slightly. We've never had an issue, right? Where the issue came in with specifically Spicy Sports, and let me just take a quick moment to talk about that. The Spicy Sports guy, it was a case out of British Columbia. He owned a business in Whistler, and he got a $35,000 expense for getting knee surgery in Seattle, Washington, because it wasn't available as quick as he wanted it in British Columbia. He went down to Seattle, he had it done, he spent $35,000, he came back, he paid for it, he came back, and then what he did is he set up a benefit plan retroactively through Great West Life in those days, put himself on the plan, did a $35,000 cost plus benefit, paid for it, had a deduction for it through his company, and then also claimed it on his personal income tax as a medical expense. and then got audited. So he ran into a huge problem. Again, when we set these things up, there's a contract, there's a booklet, there's timing, it moves forward, it continues potentially into perpetuity. We've never been challenged. Anyways, Rob, if you could carry on, that would be great.
Sorry, if I can just interject here.
Right.
Gord, I think one of the things you're asking there is if somebody wants to just park money in there for tax avoidance purposes. We do get the audit advisor that will actually ask that, but clearly that's where the reasonability clause comes in. You have to have a reasonable expectation that the budget would meet your needs.
Actually, I wasn't. Thanks, Mike, for even bringing that attention. No, I wasn't. I've never thought on the criminal side of parking for tax avoidance, but that's a good one. I'll mark that down for my next conversation. But no, it's about perception, and even everybody that I've talked to, it's always the $10,000 limit, right? And if you think about it, not too many people go above $10,000 in healthcare spending accounts. It's rare. But
we're not talking about a healthcare spending account necessarily, Gordon. Anyways.
Oh, I'm sorry. That's okay. So only the word healthcare spending account threw me off here. I'm sorry.
No, we're talking potentially, about just 100% benefit plan with a budget. So Rob, maybe you could take us through that in.
Okay. That's
all different. It is a one person budgeted ASO plan.
Gotcha. Okay. Yeah. I'm sorry. I made the wrong assumption. Yeah.
No, it's definitely all right, because I did talk about a healthcare spending account for the business owner as well. But the first point, the unlimited coverage, is just a fully budgeted ASO solution for the business owner, stating that everything is payable at 100%. So it'll look just like a typical benefit plan, the contract and the booklet will, except it just says 100%.
Gotcha.
For this area.
That makes more sense. Okay.
Yeah. So scroll a bit further down. This talks about the employees, just talks about a healthcare spending account, talks about how everything CRA approved medical expense can go through, 15% administration fee, 5% for the broker, and then really just talks about everything that can go through it. Going to skip over that pretty quickly. So the next point, to calculate the plan's cost. You go over this with the client, talk about the different aspects of both plans, talk about putting coverage in place for the employee. The next thing they say is, how much is this going to cost? So we've developed this great tool that can actually come up with those numbers right on the spot very quickly. That again helps you get to yes or no very fast. So let's just say, for example, we're going to do a case study on Sample Incorporated. Let's say that the owner is a family under the age of 70. We're going to click 1 in that. And let's just say that the business owner has a wife, has a spouse, and they have 3 children. And let's just say they think they're going to spend about $2,500 in the year for all of their costs total.
Rob, let's kick it up. No one spends $2,500 a year. They've got.
Oh, sorry, 5,000. I was going to say 5,000. So 25 for the health claims, and then 2,500 for the dental claims. We separate these on the spreadsheet just for a conceptual purpose, to help you kind of help the business owner and the broker estimate how much the spend is going to be for the year. But if a business owner sent us $3,000 in dental claims, we would pay that out. This is just separated on the spreadsheet just to help kind of conceptualize how much money will be spent. So option 1 is the budgeted ASO for the business owner. Option 2 is here for a healthcare spending account when they're looking to supplement another existing plan. For this example, we're going to say that they don't have any insurance elsewhere. So we're going to skip over the healthcare spending account for the owner and just go for the option 1. Going to scroll down to, and you can see right here, put in $5,000 estimated budget for the year. It shows you what the monthly premium for this line of benefit would be. Now we'll scroll down and we'll say they have 1 key employee and they want to offer them $2,000 for the year. You put in 2,000 right here, number of employees, we're going to go with 1. Section C is a catastrophic pooled insurance we talked about. That is the stop loss and the out-of-country emergency medical. The rates in here are for 60 days of emergency medical, but we can do up to 180 days if requested. So for this example, it has the rates already in here for the 1 family, and the business owner also wants to give it for the employee because the world's opening up and the out-of-country is a great benefit. So you put 1 right in here and it auto-calculates the monthly premium for the business owner and for the employee, coming out at $108.40. Section D, we have the option to add life insurance, AD&D, and dependent life. Let's just say that the business owner probably already has life insurance, or this could be a great foot in the door for you, the broker, to sell them additional life insurance. They probably want more than $25,000. Let's just say they want to give the employee the flat amount of $25,000. You put a 1 there. Let's say they want to give the employee, oops, sorry, 1 second, the employee AD&D, and since it's a single employee, we're going to leave dependent life blank. Shows what the monthly premiums will be right here. And we'll scroll a bit farther down, and it shows the total owner contributions per month, the $490.20. Total employee contributions per month, that's for that $2,000 healthcare spending account. Catastrophic premiums per month, that's for the stop loss and out of country. And then this is for the life insurance and AD&D for the employee. And then it calculates the taxes right here for you and shows you what a total monthly premium will come out to be, $893.99.
Rob, I just thought of this, using that example, the employee is going to spend actually $5,000 on, through this conversation, the employee's going to spend, or the owner's going to spend $5,000 on health and $2,500 on dental. So change that.
Yep. Yeah. As we go down here, they go, wow, this is a bit less than I was thinking. So let's increase it.
I figured out I was going to spend more. I want to change that to $5,000 because I want to get a couple of CPAP machines. Great.
Tab out. Auto calculates right there. Scroll right down.
There's my
new monthly cost. So it really helps you get the yes or no really quick with the client, and you can really help them understand how the costs work out. Great tool to have up on a Zoom call, or bring your laptop into a meeting and you can just run numbers right on the spot for them right there and then kind of play with it. Some I've seen brokers send this out to the client after they've kind of showed them how to use this and they can kind of play with it themselves, but great to get the yes or no really quickly. So let's just say that we've gone through with end user client. They are happy with the coverage here, happy with the total budget. You then go back to this page right here and we'll scroll a bit farther down to our plan enrollment and application docs. Really quick and simple to sign up. We just need a bit of applicant information here. We'll do the Sample Incorporated. Oops. It's a fillable PDF form. You can also print it and they could fill it out with ink if that's what they love. Scroll down here. The applicant's declaration is the initial deposit amount or the monthly premium. So you put that in right there, sign the rest. We then need the broker to fill out your information right here. If you've already done business with us before, you can just put your broker name in here. And if it's your first time, we'll need all of your information as well as a copy of your E&O insurance and your license. So really simple to start doing business with us. Scroll a bit farther down, just need a bit more business information from the client. This just hits home the plan design one more time, showing that all of their extended health and dental is payable at 100%.
So Rob, let's move along because of consideration of time. We've only got 10 minutes left, but as you can see, I think the documents are very, very easy. Thanks, Rob, for that. The documents are very easy to complete. It's all online. It's very straightforward. It's simple, and it's interesting because there was a question earlier. How do you define profitability? Right? How do you define profitability? Well, it's easy. It gets them to yes or no profitably or quickly, which means it's profitable. Where I was getting at with this particular example was you're leading the client in a direction that makes sense to them because you know where they're going, right? This is a great way to get them to pay for things that they're going to pay for anyway in a tax effective manner. You're not doing 47 different quotes in 18 different companies and putting all of these in a report. You're understanding where the client is going. You're going, I've got a solution for you. Here it is. Let's build it right now on the spot and sign up and go. So you're getting to yes very quickly, which is also profitable. You're also maximizing the amount of money that's going in and you're not playing any games and so on. One of the things that's really interesting is because this is a budgeted ASO solution with insurance for one employee or for more employees, we send you a financial statement on a monthly basis. This is difficult to read. I'm blowing it up a bit, but this is difficult to read, but you see this, and it shows what's happened in the current month. It shows what's happened in a year-to-date cumulative, and it shows after 12 months in a previous year-to-date cumulative statement. So the client can see exactly what they've done. So in this particular example, the client sent us $7,000 a month. This is we do this for every single one of our clients. But the client sent us, in this case, $7,000. We paid out $1,400 in insurance premiums. We paid out $4,109.32 in health and dental claims. We paid out, $970 in plan operation expenses in this example. So their balance or their surplus is $719.09 for that particular month. $2,300 cumulative year to date, and after 12 months previous year to date, they had a $7,000 deficit. The beauty of this program is we allow clients to run surpluses and deficits. It's not about having the money in advance. It's about having them run surpluses or allowing them to run surpluses and deficits. It's as simple as that. Tax consideration, we've only got a few minutes left, but tax considerations. The key thing to note is all benefit plan costs are tax deductible business expenses. So again, back to the discussion with clients is that this is not about having benefits. It's about having benefits to attract and retain employees. From your perspective as the business owner, it's about having a benefit plan that is tax deductible and you receive all of those health and dental benefits tax-free. So the 100% unlimited plan is strongly recommended. It's strongly recommended. Why? Because it makes sense. It's strongly recommended because you touch the claim once. You're not doing a cost plus type of strategy. And that's cumbersome and difficult. You just touch it once, it's paid, it's done. A business owner, and again, some business owners, and Gordon, I think where we were talking earlier, some business owners may want to use a healthcare spending account because they've got a strong spouses plan or partner plan that's underneath that, where the healthcare spending account always pays for something, always pays the last payer. The other thing to look at is benefit plans are part of compensation. Be creative when you're designing a plan with your clients. Be very creative, because the more creative you are, the more difficult it is to, it is to have somebody else come in behind you and change that plan. Right? It's as simple as that. So benefit plans are part of compensation. And when you've got such a small employer group, and you've got 2 or 3 or 4 or 5 employees, if you know you're hiring somebody, or if you've got somebody in your organization and you know that their kids are going to be having braces, or if you know that they're they've got needs that require a great deal more of expenses that can be run through a benefit plan. You can negotiate with them to the amount that goes into their healthcare spending account. Instead of giving you, as benefits are part of compensation, you can negotiate with them very effectively and just set them up in a separate class of employees. So you can have 3 employees like yourself, the business owner, and 2 employees, and you can have 3 different levels of benefit. It's entirely up to you. More specifically, it's entirely up to the client and how you lead them down that direction. So it's a very cost-effective and tax-effective way of designing a benefit plan that makes sense for the client. They're going to pay for the things that they use, no doubt about it. They're going to pay for them either way, whether it's an insured plan or not. There's no such thing as free. They're going to pay for it. Just pay for it in a tax-effective manner. We've just got a little bit of time left, but in summary, it's understanding where the client is going. You need to do this first. And this is where I think a lot of people really don't spend the few minutes of time to understand where the client is going. Not where they are, but where they're going. That's, I think, the most important thing. And you got to ask the question. And I'm not necessarily saying this question, but I'm saying a question like this. It's quite simple. If we were meeting here 3 years from today, what has to have happened over that 3 years for you to say it's been the best 3 years of your life? It's a great question. If I ask that question to anybody that's on this call, they're going to look at it and go, wow, yeah, 3 years from now, I want to, grow my business. They're going to start telling me things. I want to grow my business. I want to keep it status quo. I want to get 10 new clients. I want to, find a new partner because I really don't like the one that I'm with. I want to get a new partner or go into new markets, whatever it is. And then from there, it looks, you're looking at what their fears are, what's making them confident, right, et cetera. And then what do they want to promise? And then we're going to send you a monthly report that eliminates any surprises. The one thing that business owners hate are surprises. Business owners hate surprises. They really do. No one wants to be the person at the surprise party that's getting surprised. They always want to be the person that's on the other side of the room surprising the people. But business owners hate surprises. So with respect to benefit costs, hey, they hate surprise. I spent $600 on this. I didn't come close to spending that. I know that. I'm getting ripped off. Well, here they see it every single month. They see where they're at. They know if they don't spend it, it's their money. It's a surplus. They know if they spend more, they're still taking advantage of the tax opportunities, and they've got to shore up that account. It's as simple as that. The 100% plans work, and they work extraordinarily well. And it's fascinating. It's fascinating to see. Once all of a sudden they drink the proverbial Kool-Aid, right? They never go back. They never look at going back. We've got a few minutes left. Any questions? Any thoughts, any ideas? I think there's a lot in the chat box here. And I think Mike's answered some of them. Mike's answered certainly some of those questions, but
I think everything's been addressed.
Everything's been addressed. Thanks, Mike. Is there any other questions or thoughts that come up? Let me stop sharing here. We got a few minutes.
I just wanted to make a comment as
Nick Godfrey. How are you?
As a business guy, one of the things I really like about the unlimited plan, which I learned, was that I get paid every month regardless of how the fees or the claims go, which I liked. So it is a budgeted approach for the owner, and that's great. But those monthly fees, my comp is paid every month as well. So I thought that was pretty nice, regardless of the kind of claims that they're making. Is that fair to say?
Thanks, Nick. I appreciate your feedback on that. It's all about cash flow. It's all about, hey, contribute every month, you pay it every month, everything works well. This is super. Back to the profitability, it's about working with the particular client. It's about giving them the direction. This is the solution you need. This is the reason why, as opposed to 47 quotes and confusing them. It's just saying, hey, this makes sense. We're buying insurance. Hey, you ever had a client that says, hey, I hate insurance? Fantastic. Do we have a solution for you? Buy insurance where you need to buy insurance. Simple as that. Budget for the ancillary items, cost control measures for employees, right? Insurance in the appropriate places. It's about managing the promise effectively into the future. As well as that, depending on where they're going, you've got this chassis. You got this chassis on board that allows you to, allow you to grow as the client changes and grows, if they do, because sometimes they don't, without a doubt. I also want to take this opportunity to thank everybody for coming today. We've been here for an hour. I promised you an hour. You've been here an hour, diligently participating. Thank you very much. Number one. Number two, we're going to send you a very short survey. Please fill it out. We want to get feedback from you. Please fill it out because we want to do it better tomorrow than we did it yesterday. Tomorrow, we're going to be doing another Zoomcast series. We're going to be talking about some very similar things that we did today, but more specifically about the construction and renovation and building business in Ontario. So if you're interested in that space at all, I'll tell you there, we've got a very unique solution. Even though it's not a commercial for the Benefits Trust, we've got a very unique solution that I think you'll find very, very exciting and profitable. Look out for that survey. Thanks for your time. Give us some feedback. Let us know how we can do it better tomorrow than we did it yesterday. We're going to be doing Zoomcast series throughout the fall. One for the next group up, the 5 to 20, and then 20 to 100. Again, people make buying decisions differently, and where we go and how to go from there, and how to grow your business profitably. Thanks for your time. Have a fantastic day, everybody, and we'll talk at you soon.
Thank you.
Thanks, Rob. Thanks. Look forward to doing more business together in the future. Take care.
Thank you, guys.
Thank you.
Good job, guys.